quick rundown on the consumer side. Inflation came in at about the expected rate, no lower or higher. However, it is still elevated. It's 6% year over year, 5.6% for core inflation, which excludes food and energy. The month over month inflation is at 0.4%, still pretty elevated, but it is down from 0.5 growth the previous month. Core inflation was up 0.5%, which is a little higher than 0.4% last month. Still fairly elevated, especially if you look at the month over month numbers, but not going crazy. Still, it's not going away as fast as I would like it. I sure did like a couple months ago when the inflation numbers showed 0.1% month over month growth. We're headed down. Prices aren't declining very quickly. So what's bringing and keeping inflation up? It is shelter. I just said before, I refuse to entertain an inflation discussion without someone bringing up shelter and why they think maybe that shelter should or shouldn't be part of it, because I think it's a big part of it, and it's a little bit of a lot of it of a lagging indicator. Rent of primary residence is up 8.8% year over year, and it is up 0.8% month over month, a little bit more than the previous month's 0.7% monthly increase. This is I don't know when it's going to start falling, but the rate at which shelter falls is not going to be instantaneous. So it'll be a slight decrease in shelter inflation, until we get back to normal. But it's not going to be very quick, because of the way that they calculate shelter, they just don't move that quickly. So yes, even if it starts going down, we will still have shelter, I think unfairly, keeping the nominal inflation rate up.
Yeah.
Oh yeah. Also, eggs are down. Just in time for Easter, eggs are down. Make your souffles, make your meringues, make your frozen custards. Great.
Thanks for that reporting, Matt.
Yeah, no problem.
No, it's true. I mean, shelter is still up, 8% essentially year unadjusted over the last 12 months. Other items that are also up, Matt, that are a little more volatile. That's why I take it out of core. Gasoline is up month over month, but down year over year, as well as transportation services that are up 1.1% over the month and 14.6% for the year. So there are some other pieces, but I believe transportation services, they're much smaller rating than shelter and energy, unless we're looking at core. So I guess I don't have the full breakdowns right here, but yeah, to your point, Matt, if shelter was looked at through a different lens, and it's debatable whether this is the right one or not, we would be looking at much more subdued growth, and it could appear that this could be the beginning of a downward trend of inflation, or that is at least more or less the narrative. And I think that allows us to transition to this PPI report that was released yesterday. PPI is a producer price index. This is what manufacturers, what is costing them, and the headline is that the producer price index for final demand decreased 0.1% in February, seasonally adjusted. The U.S. Bureau of Labor and Statistics reported final demand prices advanced 0.3% in January as they adjusted it, and declined 0.2% in December. So this PPI report, Matt, is a little bit more forward-looking than CPI, as you could imagine. The goods goods and services have to be kind of produced before they can be consumed.
Yeah.
And so this is potential good news for those looking for lower interest rates sooner, because of lower inflation print, giving the Federal Reserve some room to actually at least plateau, if not actually lower rates at some point. But they're going to need to panic like we're in right now, Matt, in addition to lower inflation, to actually lower rates. If not, they're just going to keep them where they are. I don't see them do anything but plateauing until there's some real pain.
Yeah, it is interesting looking at that producer, the PPI charts, and you can track it from June. Now the Fed started their rate hikes around March, I think, and then it stayed pretty steady. And then from June to now, steadily decreasing the the prices there. It seems like a much more accurate picture and a much and like you hear about these and you hear about the tech layoffs, but there's other elements of demand that were going down. And I think that this is a really accurate reflection of it that maybe shouldn't be ignored. But I'm not sure, what Powell listens to. If there's a new PP, was it PCE that's coming out, I'll have to keep my eyes open for that.